Hey everyone, and welcome back to another episode. So, what is happening in the US stock market right now? That's the key question. There's so much happening. So, US stocks actually had taken a big plunge today. So, they actually had declined. The S&P 500 was down about 47 basis points, while the Nasdaq index was down about 89 basis points. So what really happened was that the Fed actually had really recently just announced they had their meeting, and then after the meeting their monthly, when they usually update the public as to what they are doing with regards to rates. And so the Fed had decided not to cut rates, and President Donald Trump was furious with this because he had built his campaign on rate cuttings and increasing economic growth and stability. And now that the first rate cut that should have been under his admission, they had decided to hold steady. So the real reason why they decided to hold steady was that Jerome Powell, who's the chairman of the Fed, had stated that there is currently high prices. And so because the prices are still elevated beyond what they had perceived and expected at this point in time, they decided to continue watching the growth in the economy and continue watching the inflation. So right now inflation is at 2.9%, which is pretty high, because really what the Fed is targeting is 2%. And so right now at 2.9, it is very, very close to 3%. And 3% and 2.9% is not much difference. It's just 10 basis points difference. But psychologically, it actually plays on the minds of individuals and investors. And so though it may not be that much of a movement, just that additional 10 basis points would actually tank the market even more, and it would actually cause prices of goods and services to rise even further, because right now with inflation at 2.9%, what they're saying is that the average cost of goods and services is increasing by 2.9%. So what that means is, if you would spend $1 on an item, now you're gonna be spending $1 and two and approximately 3 cents for that same item. Or if you're gonna be spending $100 for something, you're gonna be spending $102.90. So that really is what that means. And so President Trump had stated that he is actually ready to tackle inflation, and he is ready to implement his policies. And he suggested that what he's going to do is be making America more energy focused. So he's going to be start focusing on energy and drilling and getting energy so as to reduce inflation. Will that work? That's another story, if that tactic will work. But understanding it from Trump's standpoint is that if he can lower the cost of the main thing that would actually cause inflation to rise, then in the short run it would actually bring it down. But over the long term period, it may not be the best strategic and economic play that he can do. So the best thing for him to really do is just to allow the Fed to do their jobs, because he's been in office. It hasn't even been 2 weeks since he came in office. He went in office on the 20th. And so this is just about a week later. So the best thing he can really do is allow the Fed to really do just continue what they were doing under the Biden administration, because they actually had not reduced inflation for a really long time, and a lot of investors were expecting inflation to actually come down, and it wasn't until around October, November that they actually had started seeing rate cuts. And so right now the interest rate is at 4.25 to 4.5%, which is actually good considering that it was actually as high as 5.25 to 5.5% about a month or two ago. And so with that being said, interest rates are currently being held firm, and that is not necessarily such a bad thing. Now, to add to the reasons why the Fed has also not reduced interest rates is that a few of the tactics that the new president has stated that he's going to be implementing, so the tariffs, for instance, is going to be a cause for concern. So at this point in time, nobody really knows what or how the markets or the economy will respond to this. And so the best thing that they can do is just wait and see, because they don't want to reduce interest rates even further and then cause the economy to actually seem like everything is great and everything is going well, and then it boosts the economy, and then the tariffs come in, and then there's a shortage on the market in terms of everything. And when I say everything, literally everything. So the semiconductors, the electric vehicles, certain foods, different products, even the smartphones and electronic devices, so like your iPhones, your Samsung, your Galaxy, your tablets, all of those things would actually now have tariffs. And so if tariffs are implemented, less persons would want to do business with the United States because of the additional costs that would be implemented in actually getting that goods and services out to that country. And so because of that, the Fed is just saying, hey, let's wait, let's see what is going to happen and how things will actually respond. And so because of this, markets obviously had a sell-off, and so the markets right now are down. And so this would have led investors also, because of the tariffs and everything that is happening now, with the new rate cuts not happening, market uncertainty is actually going to be increasing. So if it has not yet been reflected in the stock market, then by the next trading day, it should start reflecting that the fear should start increasing again. And so if you check the fear and greed index by the next following day, so by January 30th or January 31st, you should notice that the actual fear on CNN's fear and greed index would actually start declining. So the fear would actually have increased. Or if you prefer checking the VIX index, then you notice the numbers should start rising again, because consumers and investor fear has started rising again. And so this is naturally expected, because with market uncertainty, it leads to more market volatility, and more market volatility means much greater swings in terms of price movement. And this is both good news and bad news for investors. So for investors who had their monies on the sideline playing a wait and see kind of game, then the minute that the markets would have actually tanked, that's when they would start entering. And those investors who would have been less skilled and less knowledgeable would actually have been purchasing when they see the big uprises, and so that negative or decline or dip in the stock market would actually have negatively affected them, because they would have bought it going up and not going down, and so when it goes down they would start panicking more. A lot of uneducated investors would actually do what we know as a panic sell. And so these are just a few of the reasons why the stock market right now is experiencing high volatility and will continue experiencing high volatility. We do expect that the market will do well over the next few months into the next few years, but the volatility is going to be increasing, especially with all the uncertainties that happening, and fear will start rising again. And so it's going to be really exciting times for investors. Really exciting time. And just one last thing before I go. So there has been a new company out right now. So China actually had released their first artificial intelligence, DeepSeek AI, and it caught everyone blindsidedly. So DeepSeek AI really is just, I have not done much research on it, to be honest with you all, but DeepSeek AI, based on what I am seeing, looks like it's just a competitor to OpenAI. And the surprising news is that when DeepSeek AI actually was being talked about by everyone, and that's everyone on Wall Street, all the investors, reporters, every single person, Nvidia actually had a great decline in the stock price. So it fell from about $145 per share to about 100, as low as $118 per share, and it's back up to 123 right now, which is considering that a lot of persons were just seeing the decline and selling again due to panic sales. So what everyone fails to understand is that DeepSeek and Nvidia, yes, they are in the AI space, but it's two completely different aspects of AI. So Nvidia's main purpose in AI is chip making, and they focus also on gaming and GPUs and CPUs and those sorts of stuff. DeepSeek is more of an open AI competitor. So there's no way that DeepSeek will actually affect Nvidia unless China actually makes their own chips and persons start buying these chips from China and less from Nvidia. That's the only way that they would really affect Nvidia. And the most interesting news that I have seen out of all of this was that someone actually had created a fake cryptocurrency of DeepSeek, and so they actually tried tying it to the official DeepSeek AI Twitter page, and they actually had to come out and say, hey guys, we did not create, or we are not associated with this cryptocurrency in any way, shape or form. So the cryptocurrency actually had reached a market cap of $48 million, and it had experienced about $150 million worth of trading activity as well. And there's still about 22,000 active wallet holders of the DeepSeek, the fake DeepSeek AI coin. And so this is really interesting because a lot of persons saw the coin coming out and they figured it was the actual company that did it. And so this just shows that persons really are interested in getting into the projects, especially at an early stage. And given that the company is not publicly traded, I guess they automatically assume that a cryptocurrency would be the next best thing, and so they just saw the fake crypto coin and everybody just decided to rush it. And interestingly, there was actually a second DeepSeek AI coin that came out, and it had an all-time market cap of $6.8 million, and it experienced trading volumes of $20 million. And it's down now to about $5 million. And it's just really interesting. And this is coming off the back of a pattern of meme coins, fake meme coins that were actually being made on the markets. And so the first one that actually took prominence, or that had started all of this, was a Trump meme coin, where they actually tried to create a meme coin, an official meme coin based off Donald Trump, and then that's when all the meme coins started coming out. And there's this whole crypto analyst who's spoken about all of it. His name is Zach XBT, who actually spoke about all the fake crypto meme coins and about 61 fake meme coins created since January. And so you can check out that article if you want to see more on it. So alright, so that's all that I really have time for today, guys. So I hope you did enjoy this session. If you like the episode, I just ask that you give us a thumbs up or a heart wherever you consume this material. Leave any comments that you may have down below, and feel free to share this episode, this show, with a friend, a family member, or a loved one, because really and truly we really want to grow the channel, and we really want to grow the page. And so the best way that we can do this is by you sharing it with someone, and subscribe as well to the channel so that you do not miss out on any new episodes as soon as they are launched. Until next time, take care, love you guys, bye.